Hello, everyone. Welcome to another episode of the Truth About Real Estate Investing show. My name is Erwin Cito, and we just got the keys to our new house. We don't actually close till tomorrow, but because the seller's a friend, they already gave us the keys. Our plan is to renovate a little bit. I don't think that's actually accurate. It's getting out of control, actually. What started with one bathroom is now two bathrooms, and now I'm looking over my shoulder in case Cherry is listening, but there's a good chance we're redoing the entire kitchen. So yeah, the reno budget just keeps spiraling. For anyone who's done a home renovation, you know what I mean. The two bathrooms in the upstairs, they're the original builder bathrooms from 16 years ago. So our plan is to redo the ensuite bath. We are removing the corner tub since having a bigger shower and a double sink vanity. Upgrade from single to double sink vanity is more important to us. We're really like all business in the bathroom. We don't. I don't recall the last time either of us took a bath. It's been years. So to give up all that real estate to a corner tub is just not it's not practical for us. So the renovations have already started. They actually started yesterday. And again, folks, we haven't closed yet. We won't close till Friday. Thankfully, our general contractor is a mutual friend of both the sellers and I. So that's a nice bonus that the work has already started. So as I mentioned, Cherry wants to do some renovations to the kitchen. It's just like an in-between kitchen. It's nice. There's some things that we would like to improve on it. Personally, I have challenges because I'm very frugal, and we don't really spend much money on ourselves. We spend money on experiences, but not so much money on stuff for ourselves. And maybe a bit of my own. I probably do have some issues. I have plenty of issues. I do have some personal issues around money. It is my personal belief, though. It's my business and investment belief that you cannot become rich by saving. One becomes rich by creating value for more people. And you become rich by because money is scalable. Saving is not. So for anyone who's been following us on this podcast, we've had a lot of past clients on this show. As you can imagine, I've been helping clients since 2010 buy investment properties that cash flow mainly in Hamilton, Ontario, the areas west of the GTA. And you can just guess at how well that's done. I have clients who somehow their houses have tripled in value. And when they only put down 20%, that is a massive ROI. So anyways, add to that, we have the Stock Hacker Academy. Our students are doing amazing as well. Susan White Livermore was in the office just last week, and she came in to record a podcast. We had lunch. We also had dinner. We went go-karting with my friend Mike Gillespie. She is up 51% since May 2020. Lynn Tham, and quick update on Lynn Tham, who was on this podcast in the fall. She provided me an update when she was on the show. She was up 50%. She actually ended the year being up 64%. My ultra conservative good friend, and I emphasize old. Nick, shoot me a text if you heard that. My old friend Nick DiTommaso is a past guest of this show. He's up 42% since April 2020. And on the spectrum, he's my most conservative investor friend, I think, in terms of stock hacking. All of them had no prior experience before taking Stock Hacker Academy. And this weekend, we're about to kick off the next 12-month installment of the Stock Hacker Academy to well over 200 new students. These will be my new friends, and I look forward to seeing them discover a new life skill. A game changer, as many past guests of this show have described it. A nice thing about Stock Hacker Academy versus my iWin real estate business is that we are able to help more people. Our real estate coaching realtor business is focused on investment properties west of the GTA. Not everyone wants to invest in the areas west of the GTA, and we don't go like crazy west, like London. There's lots of people like to invest in London or Windsor, so we don't necessarily service those folks. But with Stock Hacker Academy, we can pretty much help anyone in the world invest in the financial markets. Anyways, and also there's a lot of people who can't afford a down payment on a piece of real estate in the Golden Horseshoe of Ontario. But hopefully, whatever investment vehicle you've chosen is doing awesome for you. I'm fully supportive of anyone who has a small business, whether it be e-commerce or multi-level marketing, real estate investing, new construction condos, realtors, mortgage brokers, agents, any side hustle that works for you, that's great. As long as hopefully it's successful for you, I wish you all the best. And just in my own examination, my own journey of being an entrepreneur and a side hustler, they all work. Not all of them have different requirements for capital and sweat equity. I've honestly researched them all. I've interviewed many folks, so folks who aren't just preaching theory, they've done it themselves. I've had many people on this show. I actually have a gentleman who has a very successful e-commerce business, who's had offers to sell his business in the 7 figures, and we'll have them on shortly as well. So for me, I know I found the ones that are best for me. Hopefully you out there found the ones that are best for you. So speaking of folks who do, our guest speaker for Saturday, March 27th, the IWIN meeting, so that's in the morning, 9 a.m. start, is backyard suite expert Andy Tran of Suite Additions. He will be sharing the latest on construction costs, zonings for different municipalities, rents, and financing. Because financing is really important, because none of us want to drop that $100,000, $150,000 out of our own pockets to pay for these backyard suites. Obviously, we'd like the bank to be able to finance that. So Andy's been looking at this type of investment holistically. So he'll be bringing the latest updates at the Saturday, March 27th IWIN meeting. We also have my banker from Meridian Credit Union, Stephen. Meridian and Stephen have been awesome to us for refinancing our investment properties. We've moved a whole bunch of our investment properties out of our personal names into ownership of one of our corporations. So these investment properties no longer affect our personal credit. The benefit is that Cherry and I were able to get more mortgages under our personal names, including our new home. And hopefully that probably gives us enough mortgage and mortgage credit to buy 1 or 2 more properties this year. And there's actually a friend of ours who came up with a nickname. A shout out to Joanne, who nicknamed the strategy of taking properties out of your personal and putting them in your corporation. She called it getting her mortgage virginity back. So those are her words. Those aren't mine. Apologies to anyone who's offended. we actually explained this strategy to this week's guest on the show, Andrew Hines, who is a former mortgage agent, and he also thought it was brilliant. Don't you just love networking? And that's how you pick up those golden nuggets. Andrew was in our office. Of course, Cherry's in our office as well. So we're just, sharing. And we all get the benefit from it. So March 27th, 9 a.m. to 12 p.m. We have excellent guest speakers. Plus my team will be sharing the latest on what's happening at the street level in terms of rents, rental costs, where the opportunities are, where rents are, where resale market's at, where the opportunities at. If you're on my email list, you'll see the invites. You'll see the event notifications. If you're not, well, that's just silly. If you're interested, go to www.infinitywealth.ca, put in your name and email address, and we'll let you know. On to this week's guest, as I mentioned, Andrew Hines. Andrew is a builder. He's an investor in student rentals in London, Ontario. He has his own podcast, the Andrew Hines Real Estate Investing Podcast. Andrew is on the show today sharing how he started investing in real estate, including that time he went south of the border to invest in the US, how that experience didn't go so well, but Andrew took responsibility to learn from it, and he became a better investor for it. He's quite the dynamo, and he's so young. And from what he's learned, he's become an in-demand builder of investment properties. It's pretty cool. On the show, Andrew shares how build costs have changed during this pandemic, his findings in researching the starting of our real estate investment trust, the changes he's made to his investing in a pandemic. I hope you all have as much fun listening to this episode as I did in having Andrew over for lunch. I had Andrew over for lunch about a month ago now. We're a bit backlogged on this podcast. It was great to hang with Andrew over lunch and chat about investing and money. So hope you enjoy. Hey, Andrew.
How's it going?
Excellent. What's keeping you busy these days?
Our discussions today so far have been keeping me very busy.
Hope it didn't scare you. I can't have that conversation with a lot of people.
Oh, dude. No, I'm the right person to have the conversation. Getting real conversation. I love those conversations.
No, it's not just getting real. It's just, I'm pretty sure 80% of people won't agree with us.
It depends on the crowd. But yeah, I agree. You know, I think,
not the crowd listening to this.
I think our crowd listening to this, you know, we've talked about this earlier. Like people who are real estate investors or entrepreneurial minded because they questioned things. Like they knew the conventional path of go get a job, contribute to your pension and you'll retire safe one day was a complete load of crap. And so because we think different, we question all things about the current situation and where we're going to go, how we turn an opportunity, as we were talking about earlier, take an opportunity out of what could be, you know, perceived as a bad situation.
And as we were walking into this office, we were just joking how mortgages work.
Yeah.
How the person with assets is considered risky, but the individual with a single income, the mortgage people will lend all day.
Yeah, it's wild. I mean, some of it makes sense. Like I really like the logic more on the commercial side where it's just like, okay, you're a business person. We like it when you have more assets. Whereas on the res side with a bank, it's like if you have 3 rental properties, somehow, yeah, like you said, that's a bad thing? No, wait a minute. You have 3 tenants that want to pay you to live in stuff that you bought because you were smart enough to save a down payment or burr it or do whatever you needed to do. Yeah, it's funny. It is a little backwards for sure.
It is. Yeah. I don't even know at the bank like how much equity I have in my properties that are turning me down for mortgages.
Yeah. Yeah, on one hand, there's that liquidity focus, right? You know, how much money are you making, right? So sometimes, once you get like into that level where you're in private banking or even beyond, like once you have enough net worth, they start breaking all the rules for you, but you really got to work to get there.
It is.
Unless you were born there and then you're really lucky.
And then one of my, Ron Butler, he's a good follow on Twitter. He's up there in age, so he's seen a lot. And so to see what we see today, like how like $1 million mortgages are being handed out. And again, here I'm trying to get a mortgage for an income property, whereas we have people that make like, you know, 200 grand getting $1 million mortgage. And that's like, who's better to lend to?
On that note, because I think it is really relevant right now. It's become very difficult in Ontario because all mortgage lending, they want to drive it through cash flow, right? Does that, especially on the commercial side, does that property service? But look at what we're buying in Hamilton, like people buying stuff at 2 caps, you know, things that are ridiculous. Like you'll never qualify for the mortgage for that. So they're going to end up giving you like 45% loan to value or 50% at best. So we're talking $1 million, $3 million buildings. The average person can't come in and you know, put $1.5 million down on a property. So we're all left to get really creative, right? That's why there's this huge drive from all the people in our circles, you know, to do burrs, to add value so they can drive that income up to hopefully service it and hopefully push that loan up and you know, acquire more property. But it's a challenge here, man. Imagine how much easier it would be if normal trading of real estate was, you know, a 7 cap. How much easier it would be to cash flow. Like heck, you could buy a property, 80% financing with the bank and borrow private money for the down payment and still cash flow. It used to work for me around 6% cap rate. I could do that. I could cash flow even if I borrowed the down payment. Right. And how things have changed in the last few years just.
So for the new investor who doesn't have context and hasn't even, you know, I'm sure some listeners, you know, about 12 of them who haven't even looked at an apartment building deal. So have you seen 6.5 cap?
Here?
Sure. Where can you find it? And where can't you find it?
You know what? I mean, it's been a little while since I really like put pen to paper on that to say like where you could find it. In conversation, you know, speaking with Robbie Clark recently, he's up in Sudbury. Very, very doable to get a 7 cap up in Sudbury. And this is when you're actually, you know, for those who aren't even familiar with cap rate, right? You're taking your operating income, which is after all your expenses. So you take your rents, subtract your expenses, but right before your mortgage payment. And then you're taking that number, dividing it by the asset price, what you're paying for it. So 7% is incredible compared to what we get here, for sure. You're making money here. Right. Where, I mean, Erwin, you and I talk and you're doing all the stock hacking now because that's your cash flow, because it's hard for the average person to buy new property now and cash flow from the real estate. So where do we go from here? As an investor, I look at these markets and I think like you did, you know, it's time to pivot. You know, rather than just subject myself to the difficulties of this market, which I totally could do, I could also just expand my horizon, you know, whether it be a different form of investing or a different market to invest in, or just a different angle. Maybe I add value in different ways or buy properties that other people aren't willing to buy. There's a lot of different ways, but if we don't start thinking creative in these markets, it gets pretty difficult and you start competing. And I know you've seen it just like I have, these people competing for duplex conversions, paying like almost 600 grand to buy the house to be renovated. And there's not much left in it. Like they're basically working for free.
Apparently last night, legal duplex done already in Kitchener is just sold for $850.
$850,
I
huh?
don't know how many offers. I can look.
What kind
that
of
up
rent would
later.
that thing have been getting?
It's Kitchener, Waterloo, Cambridge, so they usually get decent rent. But
Like, do you think it's getting $3,500 on the house?
Yeah, they get
Something like that?
So even one of our clients just got $3,700 on their duplex in Hamilton. So I would expect Kitchener to be capable of something similar.
So I got a student rental that's making just short of $5,000. What do you think I can get for that? In London, though, downtown.
So I actually want to talk about that because I want to talk about like where did you come from for investing standpoint. And you talked about pivoting because there's this something happened in 2020 that would cause us all having to pivot a little bit.
Yeah, I can't think of that.
So can you tell us where you started with your real estate investing and in London students?
Yeah, students. Students were the thing that made sense to me because I was a student, right? For those who don't know, Erwin, you and I both went to Ivy. And so that's what Western, in my first year at Western, I just saw people making money because I saw my friends, second year, they were paying rent at these townhouses out in front of the gates. And I was working the rough nut math and I saw, wow, they're making some big profit. Even by my broken math, I had no idea what the expenses were, but I was just guessing. And I'm like, okay, I want to be the guy that owns these. I could see right then that would be life-changing. So I got started investing 2011 and I started investing in the States in 2012 along with some other stuff. I eventually fell flat with the States stuff. I took a crack at some development and 2012, 2013, failed at that. And basically my 20s are a story of a lot of failures. But then I finally hit my stride when I started doing sort of burst style renovations to student rentals in 2015. So that was where I really kicked it off, hit the ground running, trying to create the product in student rentals that I would have wanted to live in because I didn't live in a nice house when I was in school. And so I went through, I started adding additions. I got really good at, building additions. And then before I know it, I'm getting asked by people to build townhouses for them because I had a good little mix of trades. So somehow I ended up building townhouses, single family homes, all this stuff. So I've used my skills to build for myself and then to build for others as well. And my active income today is, largely driven through construction, the construction company that I own. So whoever would have thought I would end up here? I didn't, but here we are.
So I want to take a step back for a second. I think I missed about the US development stuff when we previously talked. You had a gold mine and you were already in London. You saw a gold mine, but you went
shiny object syndrome. And being 24 when I started investing, and I ran out of money to invest because I had just invested what I had saved. So 2 properties, I was flat broke. I had to pay the taxes owing on a line of credit come May 1st. And it was a really frustrating time for me because I wanted to go. I'm like, how am I going to create wealth if I'm sitting here waiting to save up the next down payment? This is before I understood BRRRR. So I was so unwilling to wait. I saw, Youngstown, Ohio, one of my clients was getting like 17 to 20% cash on cash, buying these houses for like 10 grand, 15 grand. And to me, I'm like, oh, great. Sounds nice. I went down there and, it's a dying city at the time. I don't know if things have improved at all, but, it had a consistently decreasing population. And I had my reservations, but I didn't, this was back before I knew to trust my gut. So I bought a couple properties and then I had a property manager that was going to handle the renovations and he took my money and he actually just lived off of it. And so while on paper, the investments I bought were fantastic, I didn't think of my plan B, my plan C. And at the end of the day, I ended up giving the one property away because he allowed it to be destroyed. My property manager, not only did he take my money, he collected rent from tenants and then allowed those tenants to destroy it, kept the money. And I ended up giving, on a quit claim, the property to him because if I didn't give it to him, I was going to have to pay to tear it down and give the lot back to the city. So it was one of those very devastating breaking situations for me. And it got me out of the game for a little bit. It was really between that kind of going down in flames in 2014 to 2015 before I actually got back in and started, aggressively trying to build my real estate portfolio again. And so I took my my lumps, but I wasn't afraid to try. And I tried at the time in my life where I could recover. And I think that's been my entire career. I didn't go the conventional path. Like you're a realtor, I got into mortgage brokering. I guess you do a lot of things beyond that, but those weren't conventional paths for people who graduated from the Richard Ivey School of Business. It wasn't a common thing.
We should go back and tell them what we do today.
Yeah, we should show them the way. I mean, there's so many impressive people that come through through that school in so many different paths, but entrepreneurship is one of, carving your own path and doing what makes sense to you. And I think for me, I just needed real world experience. I needed to get out there, and I wish I'd had mentors more than I did so that I could have avoided some of those mistakes. But at the end of the day, they're tuition to being a lot smarter now.
It's funny because I don't talk about school that much until I run into someone from went to the same school as me.
Yeah.
But they didn't teach us to rebel much.
Yeah, but I mean, I know we were talking about this earlier. Like, so few people are discerning, like in general, like that will question what they're told. Like, we question the pathway as real estate investors. We question that we were told you go get a job and save. That just doesn't work to get wealthy. I mean, you might retire, but and with inflation and adjustments, a lot of people are retiring broke now. Like they're not making enough. So we're smart enough to see that. I think we talked about this earlier, but Ivy kind of taught us. Like, we were doing case studies and questioning business owners and questioning what was the one company we were talking about earlier. Like, we're talking big companies saying, "Hey, what did they do wrong?" And it's funny, like when you realize that people who are paid $1 million a year, in executive positions are making these mistakes. They're not infallible. Yeah. And wow, that's such an empowering thing to know as an investor, as just a citizen, civilian in your country, like to know, hey, anyone can make a mistake and there's always opportunity if you're looking.
Anyone can make mistakes and things change.
Yeah.
Because I remember we studied this little company called General Electric a lot. And they haven't fared that well since.
They haven't, right? And they were considered. I remember hearing Warren Buffett talk about them as the obvious go-to, right? Back in the 2008 crash, that was the company that it was like an indication of that been around for like 100 years, not going anywhere kind of company. Well, yeah, things do change. You're right.
Things do change. It's a learning lesson for us to understand what didn't go right for them, and that also, things don't always go right. Kind of like that thing that happened in 2020. I don't remember what it was, though.
Yeah. The unspeakable.
Thank you for sharing the Youngstown,
Ohio. Yeah,
Youngstown, Ohio.
It's like it was 5 or 6 hour drive from me, but that would have been fine if I had known how to set up systems and how to create teams and how to hedge my downside in terms of the amount of power I gave my property manager over me, right? By having no idea who he was hiring, who had in the house, who the tenants were. Like the one house, I never set foot in it ever. Like I bought it and sold it and I owned it for like 3 or 4 years and had never set foot in it. I've done that since, not like it to buy it. I hadn't seen it to buy it, but that was because I knew what I was getting. But that takes a certain level of sophistication to get away with. And if you don't have it and you do it, you end up like I did and you get burned. Like you think you can do it, you get all I don't know, overconfident and try and do things like this. But I'm glad I went through that stuff because now I can see, when something obviously doesn't seem to make sense, trust that instinct. And I knew back then, I'm like, I don't really know how this gets me to where I want to go, but I just need to do something. And I don't know what your take is on this, Erwin. Do you think that's good advice or bad advice? Because everybody says take action. But if you haven't done any research or if you don't trust your gut, then you could be doing yourself a serious disservice.
I don't know what the right answer is, though. But I know a lot of people who knew they didn't have all the answers, did it anyways, and were very successful for doing it.
Tons. Yeah, I'm probably in the real estate side, one of the few that has that story and lost. I mean, I know, I hear them. Maybe people don't like talking about it.
You didn't lose over the long term.
Didn't. No. I just invested in myself. Really, that was what that was. The pain was just an investment. So at the end of the day, big deal. Like I can use that as a huge point of leverage in terms, especially teaching other people not to do this. Don't do this.
But you also learned about managing people.
Yeah. Absolutely.
Because we learned it. We did take organizational behavior in school.
Yeah. But I don't think that really helped much at all. I think there's this point of like where things come together, like you learned it in school, but you never really know it until you actually feel it yourself. So when I felt that guy like just take advantage of the situation, it brings things all back down to earth. Like, oh, okay, so losses really can happen if you're silly or if you make mistakes.
So I actually see this problem with a lot of new investors when they're used to working in a corporate workplace.
Yeah.
If you need to reprimand someone, you send them an email and you CC their boss, right? Yeah. And then magically, then whatever you need done gets done, right? That's how it worked for me in corporate. Now, Mr. Property Manager or Mrs. Property Manager, tenant's late on rent. Where's my N4? Tenants saying what's leaking, blah blah. Like it's all different when you're dealing with people or you're trying to hire a contractor off of Kijiji. Hey, Mr. Contractor, I paid you $25 an hour. Why didn't you show up on work on time?
Yeah.
It's very different at this level versus what they're used to dealing with in a corporate environment.
Oh yeah.
Right.
And I used to take it personally when a contractor would do something bad, like or they wouldn't do a good job, or they would take advantage or steal, I used to take that so personally. But I don't know, somewhere along the line, I got desensitized to that. Like I've had multiple like break-ins in my life where like, I went away for a week and a guy like broke into my house and stole a bunch of stuff. And again, that used to upset me. But then when I started to see some of the people that actually do that stuff in London, it's like, it's not like they're thinking clearly. These people who take advantage of you, like they're in a weird place. And I try and be understanding about that. And I think the reason I bring this up is by not internalizing that and taking it personally, it removes the ability to be hurt by it and for it to sideline like me from doing more. It came to a point eventually where I just accepted that theft and damages and things like that are just part of the business. I actually build a line in an expense item for theft and damage because I just kind of expect it. And I try and take the emotion out of all that stuff. And then it just allows me to continue to grow.
That's a good point. Going back to like new investors, tenant doesn't pay rent. Like the new investor just crumbles.
Yeah. So it's like, what can you do? What can you do to not feel that way? Yeah. And to me, one is expect it.
Yeah, it's expected.
So like literally before you buy it, say, you know what? What's my worst case? Okay, what if the tenant comes in and doesn't pay rent for a year? If you can somehow in your head figure, okay, well, no, it wouldn't really be a year. I'd get them out by 6 months. But even if it was a year, I've got the money for that, or I can borrow the line of credit. If you've gone through that scenario, all of a sudden it doesn't scare you anymore. But if you don't face it, then it can scare you, right? If you allow it to be emotional without actually digging into, well, really, what does that mean? Okay, that guy stole a jackhammer from me. It costs like $1,000. And I literally just paid for it. Actually, I hadn't even paid for it. I just bought it and hadn't even paid the guy. And it got stolen that night. This kind of thing would happen. So anyways, when that kind of thing happened, it's like, wait a minute, how much am I making on this deal? Okay.
Yeah.
It's like,
exactly.
It's reframing it, right? Like, okay, it's kind of like what we talked about earlier. Like, how do we take advantage of the scenario, right? Let's not focus on the negative.
Not focus on the negative. Again, I'm picking on the new investor. The green investor is like, oh, I had to show the property to tenants and to fill the property, blah, blah, blah. Like, okay, how much money did you generate doing that?
Yeah.
They're complaining about you having to put up some effort. Like, oh, I signed the rent for $3,000. Say it's a student rental, right? Like, or it's not just $3,000. It's $3,000 every month for 12 months, right? All that effort generated you $36,000 of income.
Yeah.
Right, of rental income. How much do you make at your day job? you make $70 an hour. That's fantastic. $70 an hour is fantastic. You just made, you generated $36,000 of rental income in about 10 hours. That's a pretty good rate.
Yeah, I mean, a lot of you don't see all of it, right? Because a lot of it's going to depend on your mortgage, and you're appreciating. But yeah, like you do really need to look at that sometimes.
Yeah. And then we both invest in Ontario, so it's been a pretty good bull run.
Yeah, property values have gone up a little bit for sure. Yeah,
and then back to student rentals. So what has changed? So we were joking around, avoiding the word pandemic and all that sort of stuff. What changed with your investing? How did you pivot with your existing portfolio of student rentals to what did you do when everything hit the fan?
Well, you know what? I wasn't in a position that I had to do anything too crazy. When did we hadn't even had new tenants move in for my turnovers at the time because I signed most leases for student rentals start May 1, especially at Western. For me, it's May 1's the start date. So, shutdown happened in February. So May 1 move-in was fine. I knew I had time. It's where things got a little bit different was in the fall. That's when I do my re-rentals for the following May. So I have one that still needs to be re-rented, one unit. But I was lucky that most of my students just wanted to re-sign. They didn't want to look around. What I did notice is that kids were still coming to school. And so nothing much has changed yet, even though they don't have in-person classes right now. But come September, if we're still in that scenario, I'm curious as to how that's going to change. So for me, I just sold one of my student rentals. I wanted to kind of get into a little bit more of affordable housing or get into something that's a little bit hedged against that, just in case the unthinkable happens. Not that I expect it to, but that's just what it is to be an investor, right? You just kind of want to hedge your positions. So
take some profit off the table.
Yeah, exactly.
No one goes broke taking profit off the
Yeah,
table.
so I took some profit off the table. So that was a property I bought for like 200, put 200 in to renovate it, and I just sold it for 675. So that was
That's okay.
Yeah, that worked out okay. I held it for a few years, it cash flowed, and that's the power of real estate, right? So that one was a good one, and basically what I'm more just open to is, how would I pivot, if I needed to. So I may sell one more. And then the other thing I can do is I have some properties that have land in the backyard. So I have the ability to, say, build a second unit and maybe transfer them over to more of a family type element if the unthinkable happens and we have a significant decrease in admissions. It's hard to say whether that would or wouldn't happen at Western. I think that there'd be a huge societal resistance to not going to school because, all these 18-year-olds heard their brothers and sisters and, parents talking about how great university was. No one wants to miss that. So, that's a big reason why I think people came back in September and why they want to be there now is why would you want to give up your experience? Even through all this, there's still a lot of people living in the houses right now. Why? We're supposed to be stay at home, but there's only so much living with parents that some people can handle, and we're seeing that. So pivot, it's mainly just kind of hedge my position a little bit so that it's not my entire portfolio if the worst is to happen. But overall, it's I've just been managing and allowing things to play out, and so far it's okay.
Can you explain the affordable housing? Because when I think affordable housing, I think government.
No, I don't mean government. No, I just mean, so I shout Kellen out all the time. So Kellen James, if you guys want to look him up, but he got into like Old East Village, and Erwin, you and I were talking about this earlier, but in London, which was, traditionally like an east of Adelaide, which, kind of a stigma area, but.
Let's just slow down there. So it's like, I love myth busting.
Yeah.
Where old rules are broken.
Oh yeah. They were bound to. It's like the same as Hamilton though, right? Like remember, like there were private lenders that would not lend, not on the mountain in Hamilton. Like so if you were in that Barton area, tough luck, right? Like the A banks would do it, but no, none of the B lenders or the private lenders, they didn't want to. Not none. I shouldn't say none, but eventually things change, right? Like demographics change, and so Kellen was buying in this area, and he was buying. Sorry,
I just want to emphasize this to the listener. So the ignorant folks like myself, who are not from London, you were just told, do not go east of Adelaide.
Yeah,
as in, like, bad things happen to you as soon as you cross the tracks.
Yeah,
I don't even actually know. I didn't really go asking beyond that. What actually happens to you when you cross the tracks? Do you get jumped? You get mugged?
I mean, you're going to see the same thing. Like for those familiar with Hamilton, you're going to see like some of the same, but not nearly as bad as what you see in the East End of Hamilton.
Area of town.
Yeah, like some interesting characters walking around, but there's still a lot of decent sized lots. One of the things that, in that neighborhood is there's a lot of houses that were built with trench poured footings, which means they sink. So they didn't actually have a proper footing. What they would do is they would dig a trench and they would just dump concrete in it. And that's when you built your house on it. And that was a way.
No forms?
No forms. Yeah, they would just dig a trench. So that was actually a way. So what you'd notice in that neighborhood in general is that like the build quality wasn't as good right from the beginning. And, you can see the same thing in East Hamilton. Maybe not the trench pour thing. That's not as common. But what I've noticed in that neighborhood, anytime I looked at houses there, is that there was a lot of sinking and shifting. Like it might have been soil type. It might have been a combination of footings and soil. So I was never that keen on it. But Kellen didn't care. He didn't have the he didn't mind a couple of imperfections. And his portfolio, like I interviewed him on my podcast. He had like 3.5 million. He came on like 18 months later. And his portfolio is over 7 million, and he only bought like 2 properties. Like he's like seen a doubling on some of his properties and more in the matter of a couple, like 3 years.
Right.
And so back to this affordable housing idea, it's that going forward, when we look at our inflationary problem, like it's getting more and more expensive for those to live, meaning that their available discretionary funds to go towards housing, I shouldn't call that discretionary, but their available funds to go towards housing has been decreasing. So if you're looking forward and you can predict where our affordability problem is going, the most affordable housing is going to be the one poised to have the most demand for it, which is going to actually push it up in value, which is exactly what he's seen. So it's me really just being an observer of what's happened already. Like pretty much anywhere in Southern Ontario right now, if you can sell a house under 400 grand, minus some fringe areas or like, really obscure locations, there's so many buyers ready to buy that. Right there, that's where the most bidding wars are. And then the higher your price point gets, like if you look in London, as soon as you get over like $700,000, all of a sudden you start getting a lot more value for every $50,000 you spend because there's less buyers that can afford that there's less buyers in that pool. So when I say affordable, I want to own housing where there's a lot of buyers in that pool, or there's going to be. Not necessarily there are now, but there will be based on what I can see coming. Yeah, if there's a lot of buyers in your pool now, then you're just going to get into a bidding war, which is where we see ourselves, right? Like January, we're in, there's so little inventory right now across the board, no matter where you are, which is why we see prices just going crazy. So yeah, long and short is like, I want to be in real estate. It's just, my stuff was very premium. From a student rentals perspective, I was among the best. And
you're already highest and best use.
Yeah, so those ones don't get pushed up as much by the natural appreciation, because they were already very high in terms of, would an investor want to buy my product? Because my product was already so much higher priced than the average. So I didn't see as much of a gain on my assets, which is a little frustrating. Like I would have loved to. I mean, that's not why I bought them. But at the end of the day, I think that having a little bit of that and then having some affordable housing is a great position. So that's what I'm working towards now. So that's one option. I'm still examining options now that I sold that last property as to where to redeploy that money. But it won't sit there for too long.
Right. So I think what us old folks call it, because there's 7 years between you and I. What we called it was like area of transition. We're looking for like the next spot, right?
Yeah, like where can you see, like it's currently a C-class neighborhood, but there's no giant smokestack over it. And if people put in a little bit of money, it could be a B class. And if you can foresee that, that is like Hamilton in a nutshell on the East End. Like that's what happened. It just continually transitioned, and then Toronto has like neighborhoods like that. Northwest of Ossington, I'm trying to think of that area. Like Bloor Village, is that somewhere in that area. I'm not that familiar with that area, but like you drive around over there, it looks a little bit reminiscent of Hamilton in some ways, and eventually that becomes hipster, and that becomes cool. So I guess if we can kind of see that coming in these transitional neighborhoods, I like affordable markets. So rather than get into a crazy market, or stay in London and get into the bidding wars. Why not look to other areas that are still really affordable, have existing infrastructure, are all set up and ready to go? This is why people have spread to Welland and Fort Erie, because they're affordable markets with infrastructure, and people need housing. And what are they going to do if they realize they can live a better life by going out an extra 20-minute drive? Then if I'm the guy that owns some of those properties and can rent them to them, I stand to benefit.
You raise a good point, because I just want to make sure people understand that. But if you're looking for an area transition and you can see smokestacks, might not work.
Yeah. There's malignant or acute or chronic, right? Acute condition can be cured. Like a cough or a cold is acute. Chronic would be cancer or something like that. So you look at the smokestack as that's something I can't change. That's more of a chronic problem for the area. But if it's an acute area, meaning it's got a lot of riffraff running around,
like crack houses.
Yeah, like those can be transitioned. Yeah, like Beach Boulevard in Hamilton, like there are people who harvest copper out of houses and shoot up in those houses. Like I've seen some stuff, firsthand down there. But that area is in transition big time, and those problems will be solved. Now, some things about that area that can't change is you've got a highway behind you that's a little bit noisy, and then you've got power lines on the beach. Those things I would weigh, right? How much are those going to affect people? If I can find lots that aren't obstructed by those, then they don't really have the chronic problem that the ones that do. I try to avoid real estate that has a chronic problem. Like if I'm right on a main street, a 4-lane street in the middle of a city, like I just, as a rule, try to avoid those properties because I don't want to be backing out onto those streets. I know that no tenant wants to do that. So, I just try to avoid those quote unquote chronic problems for a property. Hopefully that analogy was helpful. If not, just disregard.
I think it's helpful because I know people who would buy in areas close to like the rail or close to the smokestacks because it was cheap. They thought they were value investing. But that piece of real estate, it won't appreciate as stuff, like 100 meters further away.
Right. Yeah. When this boom happens, you're not going to see it happen nearly as much. Like you can still benefit in those areas. It's just what's your appetite, right? If it's worth it to you to get the cash flow now, you're probably just not going to feel as much appreciation as the other areas. But I mean, I've never banked just on appreciation. I've always banked on cash flow because none of us ever know what's going to happen with appreciation. The market could tank tomorrow. But if we have our cash flow, then we can ride it out.
Now, let's talk about economics then, because we're just talking about we can't bank on appreciation. I'm the same way. I never banked on it.
Yeah.
But I kind of expect it.
You kind of expect it. It's like the gravy, right? Like you figure it's there, but you get your meat and potatoes, so to speak. I say that being vegan, but like the idea is we just can't know. We expect it, but in the short run, anything can happen.
Anything can happen.
That's what we really need to be real about. And as an investor, what I had to learn throughout my 20s of just like a lot of nights of not sleeping is the things I needed to do to be able to sleep. And cash flow was one of them, and a good buffer in my accounts was one of them. So these things don't bug me, right? If a property has a sewer backup or something like that, for a lot of people that breaks them. Like I had a property that literally rained from the top floor all the way down throughout the house. It was this thing that just kept happening. None of the students could figure it out. And then they'd send me videos of it literally raining in the living room, water pouring down, and they didn't know where it was coming from. It curled the floorboards and just crazy stuff. But you know what? I had a buffer. It didn't upset me. I'm like, okay, well, you know what? I guess I'll just renovate this house. So I just renovated it when it was done. So, if you have money, if you set yourself up, you don't worry about those things. And that's where I really try to be. Yeah. So yeah, pivoting to economics. What do you want to talk about?
I'm trying to think of the question. Because we already had like a 3-hour talk.
Yeah, Erwin and I talk a lot.
We really should have recorded.
We should have just done a Joe Rogan style 4-hour marathon here. Although some of it may not have been appropriate.
No, there were F-bombs and there were very controversial things that would probably get us banned from something.
Yeah,
even Parler, you'd probably even have that taken down, or Parlay. I don't know what it's supposed to be. Whatever. So long term, why would there be the expectation? I don't want to even put words in your mouth. Okay, so long term economically, we were talking a lot about fiat currencies before we were recording. What should we expect to see in real estate prices? Even let's go back. Take a step back. Actually, we talked earlier about how 80% of folks won't understand what we're even talking about when we talk about why we get into real estate, or why to have businesses, or fiat currencies, or inflation in real estate. So I know you spend more time researching this stuff than I do.
Sure, yeah.
So what is your expectation on real estate prices, right, long term?
Well,
let's start with that.
Yeah, we gotta unpeel the onion. But I think, the short answer is I think that the middle class and the lower class are being priced out of real estate ownership altogether. I think that's been something that's been coming for a long time. And what's happening? Foreseeable. Yes. Yeah. And I used to make the comparison on my podcast, like London, England. I think it was like 90 some odd % of people who live there were renters. So not very many people own property because it was just out of reach.
And it's really expensive.
Yeah, exactly. Out of reach, really expensive. So I think that's where we're headed now, because you just look at the combination of inflation. So our buying power is being taxed like never before with the printing of money, injecting of money that shouldn't be there in our economy. And we don't have more goods and services to buy. So now we have all this extra currency, but no more goods and services. So where is that extra money being absorbed? I think a lot of it is being absorbed in the real estate market. I think that it's being absorbed in some of the things we buy in the grocery store. But I mean, as in the building industry, being where I am, like I see it every year where 20% more on aluminum, and this year lumber tripled, although that's going to normalize a bit. It's never going down in my experience. As long as I've been in it, it's always going up, and far faster than people's wages. So I look at it and the amount of discretionary money of Canadians is going down, and the amount of debt for Canadians is at an all-time high. I think, it's just a natural progression that one day they're just going to not be able to afford it. Like our government can lower interest rates only so far before they can't lower it further. How are people going to be able to buy those homes? So, I think that's a likely thing to happen, which means our real estate prices are going to go up. Because how could our real estate, if we have a growing economy, let's just say hypothetically we do, how could our real estate stay below the cost of replacement? And as long as lumber is going up and drywall is going up and the trades want to be paid more. Like we were just talking about how bricklayers want to be paid like double what they wanted to be paid 3 years ago. As long as that trend continues, if it's more expensive to build a new house, then it's going to drive up the resale market. So, the first townhouse project I built, we were about 115 a square foot. Second townhouse project I built, we're closer to 160 a square foot. 2 years, 3 years of separation. 2 years, we'll call it.
In the same material quality?
Similar, actually, even considerably less, because we went hardy board versus brick on the second. But we had a bigger footprint, so there were some things that would vary. But overall, you wouldn't expect to see such a big, drastic change. And it was heavily driven by, lumber and forming costs and
labor?
Labor's a big part. I think concrete was big because they had a big footprint. But, there were several things that just went up in cost. Some things didn't, but many, many things are going up cost. And as long as this keeps happening.
Nothing's going down in cost.
Yeah, nothing's really going down, right? So as long as this keeps happening, it's going to keep pushing up our resale market, which is why people keep flooding to areas that haven't been pushed up yet. But then what happens once they've hit the border, right? What happens once you hit Port Colborne or Fort Erie? You can't go any further.
Or Windsor, friends.
Yeah, or Windsor, right? How much further can you go,
Detroit.
right? Yeah, then you're going to cross the border. No, you're going to end up going north. And So I think in these densely populated areas, you'll have the old money holds on to their houses and then rents them out. I think we will see a decrease in home ownership, and we're probably going to see home ownership just go out of reach for most people. And that's sad, right? That's
Totally
not
sad.
something that I think that we should be seeing in Canada. I think it's entirely preventable, but I think we talked about discernment earlier, and if more people were discerning about what we're being told about current policies and lockdowns and the common sense behind that, there's a lot of questions.
Before that,
just
read the news, interpret it.
Yeah.
Oh, lumber prices are this, eh?
You can't, something's got to give, right? Like something's got to look at the grocery store. Like, I don't know if you notice it, but I mean, it seems like things are so much more expensive.
I'm cheap, so of course I notice.
Yeah, you notice it, right? Like I noticed it. Like I find it ridiculous. My wife and I, we look at the grocery bill, like barely anything. We almost spent $200. We're like, what the heck?
Really? But you're vegan.
Yeah, you know what? Eating vegan food, you can spend big money eating vegan, man. Get into that organic, grass-fed, no, not grass-fed, grass-grown.
Grass-fed celery.
Grass-fed celery.
Feed the celery grass.
Yeah. So earlier we got into talking about fiat currency and what the impact is there. Well, fiat currency just means it's not backed by anything. So your currency is just paper, right? The only reason we value the Canadian dollar is because we're told to, right? It's called legal tender. Our Canadian government said you should use this. So that's really it. I mean, it used to be backed by gold, and the American dollar used to be backed by gold. But because they can do that fractional reserve lending that we've talked about, and anyone who follows me will have heard me talk about this, but because the bank can get $100, and that's your money, Erwin. I could be the bank and I can take $90 and I can lend that out to Cherry, and then Cherry can pay somebody, they come back to me, and now I have that $90 back. I can lend out 81 of that. So theoretically, that $100 creates 1,000. Now, what happens when you take our government's $500 billion overspend this year and you put that into the fractional reserve system, so that money circulates, and then it has this compounding effect because we're now going to allow people to lend out 9 times that $500 billion. What happens when that becomes $5 trillion? And it's chasing the same goods and services that were available in 2019 and 2020, because we don't really have more people producing right now. I mean, people are in lockdown. If anything, they're producing less, but there's more money out there.
Yeah, and they're saving it.
And they're saving it. So, and when they save it, the problem is we don't see the problem right away. And this happened in Germany during the war because people were printing a lot of money, but people weren't spending it, and they didn't hit hyperinflation until they hit this critical point where people felt like they had so much money, they're like, okay, time to spend. And then it happens all at once, and you get this crazy inflation. Well, those who don't own assets when that happens are going to be left holding the bag. They're going to have worthless paper. Not worth less, but I mean, who knows where it could go? And
I just want to pause you there. Yeah. This is all like economics 101.
Yeah.
Like this is all information available to anybody.
Right. And you'd think our finance minister in Canada knows better. And they would say, well, wait a minute, guys, we can't do this because we're going to destroy everything, right?
We've talked about that before in recording. But even still, I mean, for the individual.
Yeah, for the individual.
For like the individual listening.
Yeah.
This is all information available to anyone.
It is. You just have to dig, right? You can't just listen to the news because they're not going to tell you this.
They won't
tell you this. But I mean, this should be taught to everybody in high school. But it's funny, like we joke with investors. We joke with investors. Why don't they teach this stuff in school, right? Like why don't they teach real estate investing? Yeah. Why don't they teach economics? Well, if they taught us all, we would never put up with this. We were like, no, you're not going to do this.
Bad.
I don't know. I mean, I don't know the answer there, but I think it's really critical at a time like this that we know, okay, so what survives that? And in my mind, what survives that is, like I said, affordable housing. No matter what happens in our economy, the most basic form of housing will always be in demand. And then going beyond that, that's just my opinion, right? Not everyone has to agree with me. Going beyond that, gold, silver, we talked about this earlier too. Like, what does gold really do? It doesn't really do a whole lot, but it's got $6,000 of valuation where it had a fairly consistent buying power. So that's why I like that. Silver, similar, So yeah, real estate, gold, silver. I don't love the gold, silver because it doesn't produce anything. But hey, these are just ways to protect your wealth, right?
It's insurance.
At this point in time, we got to have insurance. We got to protect our wealth. And then, of course, we still want to progress and buy more and, do our burrs and do our flips. But you just kind of got to be aware that this is stuff, like you said, it's economics 101. And I think everybody listening should have a basic level of understanding of how our monetary system works, how they create money, the theory of money creation, how they do that fractional reserve lending.
Because if they did, they'd be as scared as I am.
Yeah, they'd be as scared as Erwin and I. And I don't like to be alarmist. Like I always try and be delicate with it when I talk about this stuff because I'm not trying to be that guy that's all alarmist and get everybody worried. I think awareness is just important. That's all. Because then we can make better decisions.
Yeah.
And so
because then you'll turn off the hockey game and you go look at
Yeah.
At least turn on MLS and
Yeah.
look at some property.
Yeah. And if anyone wants to some basic material to kind of get familiar with this stuff, Mike Maloney, Google Mike Maloney YouTube Mike Maloney.
Mm-hmm.
He's got a 10-part series on the history of money. I forget what it's called, but yeah, just search for a playlist. It's like a 10-part Hidden Secrets of Money or something like that, and really, really good stuff. He explains kind of how this whole system works in government spending. And again, information is power when you can put it to use. So I think this is really critical stuff at a time like this.
Because I think if you understand these things, then you'll start seeing opportunity.
Absolutely.
Or even if you don't start seeing opportunity, you see opportunities to hedge, at least.
Yeah. Well, I just look at a city right now that's below the cost of replacement. Like, say I could buy real estate in a city with existing sewers and water mains, roads, and all that, and say I could buy at $150 a square foot. It's pretty darn near impossible to rebuild at that price. So what are the odds that that's going to go down too much more than that? If anything, in a crash, I could see people leaving the more expensive areas and coming to these cheaper areas. So that would be a way I would hedge. That's one example.
Mm-hmm, mm-hmm. I was thinking more like something. I think an accessible hedge for most would be because I'm a value investor when it comes to real estate.
Mm-hmm.
I think about what's the most damaged piece of real estate right now. I think student rentals and condos.
Yeah.
So if I'm someone with kids, and I would guess that most kids, when they get a little bit older, they're probably want to live in Toronto.
Mm-hmm.
So, that's just one option of a hedge to me.
Yeah. Condos seem to be starting to rebound.
You wouldn't be surprised.
And who knows? Like, who knows for sure? There's a couple of signals that seem like they might not be following as much. But I mean, in Toronto downtown, there's like double the inventory in condos that there was at this time last year.
Mm-hmm.
So that explains why the value has come down. Who knows how much more it does? But if you believe things are going to fully resume eventually, people are going to want to live downtown, right? But right now, there's no benefit to living downtown. Right? You can't go to a hockey game. You can't go to a bar or go out for dinner. You can't do any of that. You can't even use your gym in your condo. So you used to pay a premium to live downtown, and now you're paying a premium for what? For nothing, which it makes perfect sense why there would be an exodus from downtown and why all these other markets would boom. But that could reverse, right? Like
it could reverse.
Yeah, it could. Yeah, I mean,
there's just too many people coming to this country.
That's the challenge, right? I mean, you and I talked about a lot of common sense earlier. You do real basic explanations of things in your head and you're like, that doesn't make sense. So we immigrate a lot of people, but we have a very lethargic and slow planning process. So we can't build enough new houses to house all the new people we bring into this country. And where do most people want to go? Toronto. Toronto's the number one location. And then, Vancouver and Montreal would probably be second and third. And they're all coming to Southwestern Ontario when we don't have enough housing here. They're putting existing Canadians. What's that thing about secure your own air mask before you try and secure your fellow passengers? Shouldn't we be trying to make sure that our existing Canadians are taken care of before we bring more people into this country? I mean, I know there's counter arguments, but
everything's bad.
And
then whatever side you take, you're bad.
You're bad guy. You're bad guy. Because I speak conservative, I get labeled. No, not really. I mean, again, I think a lot of people in this space, have some of those conservative, fiscally conservative values, right? So. Same thing we were talking about earlier with the minimum wage, right? Minimum wage sounds like a wonderful thing, but only a market can dictate minimum wage. A politician can't, because if the market's not willing to pay it, it just puts people out of work. And then if we're allowed to import from China and they don't have a minimum wage and they'll pay people $1 an hour, and how could anyone in America keep a job at 15 unless what they were doing was truly worth more than that? So it's a recipe to put a lot of people out of work. And somehow it's a decision like that would be sold as a positive. But it's crazy to me because actually there's a really good, if anyone wants to follow, there's actually a really good interview, Joe Rogan and Peter Schiff, where he talks about kind of the idea of, minimum wage and why that doesn't work. He's like, when I was a kid, he's like, I used to work at a gas station and when I would, between pumping gas, he's like making like, $1 an hour or whatever, like really low. He's like, between, pumping gas, I could go over and I could watch what the mechanics were doing. And I was learning about how to work on a car in between pumping gas for people. It was like such a learning experience. He's like, if they had a minimum wage, I never would have had that opportunity to learn. He's like, and I didn't need a minimum wage.
He wouldn't be motivated to learn.
Yeah. He's like, I didn't need a minimum wage. He's like, I lived with my parents. So, $1 an hour was fine. And I'm paraphrasing this story. So, it'd probably be, different if you listen to it, but that was the idea. It's just another way to look at things, right? I think there's two sides to everything. Some things, like we said, don't make a ton of sense, when you kind of break it down. So I guess the whole point of that was really just try and see both sides of these arguments and, hopefully that helps you in some way in making your real estate decisions. We're going all over the place, or maybe I am.
I personally enjoy seeing all sides.
Yeah.
It's part of the nerd in me. I don't do it for everything, obviously, because there's only so much time.
Yeah.
And then, like we were saying before, I always focus on now take this information. Now, how do I profit from it?
Erwin, you're really good at that. And I said this to you off the camera, or off the mic, but you're really good at that. You've created so many wins out of this past year with what you're doing with Stock Hacker. And then of course, just you're taking action. You see a need, you see a lack of education, you started a course for it. Finding a way to take possibly a perceived negative and turning it into a positive is a skill, and one we should all be working on.
Mm-hmm. And we were talking about, we're not going to say who we wanted to win the U.S. election, but I'll put money that you probably knew who was going to win before I did. So
I guess.
So when I had my theories on who was going to win, I was loading up on cannabis related stocks and renewable energies. And if you look who's done really well, right, rather than focusing on who won what, or if the election was fair, or who's that guy with the horns and the Capitol Hill. I was more researching how to be a better investor. Yeah. Right. And it's been very profitable for me.
Oh, absolutely.
And to go back to your minimum wage talk, the other side of it is you're just motivating people to figure out how to replace human beings in their work.
Yeah, that's the tech side, right? Yeah, so
for example, Amazon has it's been a while. They've had that grocery store in New York, I think it is. I forget where it is, but they have their grocery store. You just put stuff in your bag and you walk out, and I don't understand the technology, but they basically know what you walked out with.
Use like RFID or something like that.
But if you walk out with like 2 bananas, I don't know if they put. I don't know.
Yeah,
I don't know
how they weigh it. Yeah, that's interesting.
But again, there's no human interaction at all.
Yeah.
I think they probably have like one person to manage the store or something like that.
Mm-hmm.
But again, my point is that as we make humans more expensive and as we fight for things such as like sick paid leave, right? Like it's difficult for any business to pay for a resource that's not even working.
Yeah.
Right. I see both sides, obviously, because people need to eat. But again, you're just making the business case for technology to replace humans stronger.
But then we have that problem with unemployment, right? I mean, on one hand, people are going to go find something else to do. So yeah, like I like what you're saying. I agree with you. We got to find a way, find the silver lining in everything. And I think that's a great attitude to have it, because it was a tough year for a lot. Actually, it was fine for me. Everything kept going, right? Like us in real estate, things kept going. Like we've all been pretty fortunate. It's more just, I think there's definitely a need for some change going forward. But while we're riding this out, we'll just make the best out of it.
I was telling my neighbor who doesn't invest in real estate, I was saying, to me, this was all predictable in terms of where real estate prices have gone. COVID accelerated things.
It did. It just accelerated what was seemingly coming. We didn't have that much debt as a country, and now we pretty much doubled it.
Yeah, we doubled it for how much economic growth did we get out of it?
I'd have to look. It wasn't. I don't think we grew. I don't think we grew at all. We shrunk.
But we knew the governments were printing money to infinity.
Yeah, this is really exposing it. If anything, I hope that people will see, hey, wait a minute. Like maybe they'll, snap some people out of it to maybe we make a different decision next time we go to the polls and vote somebody in who's going to have a more responsible policy. And hey, maybe this will be actually a catalyst for change for good.
I'd even take it a step further and say, how do I hedge for this?
How do you hedge? Oh, I agree. And
I vote, but how much change will that make versus what decisions can I make to my investment portfolio, my business?
I agree.
How do I hedge for my kids, stuff like that?
Yeah, and that's how I've been treating it right from the beginning. So for me, I saw this and I thought, you know what? It's not the time for me in the student market to be buying more student rentals or trying to burn more student rentals right now. I'm going to see how this plays out, make a few strategic moves, kind of investigate some new markets. So that's what this year has been a lot about. It was a heavy research year. Looking at new opportunities and where I've come, to conclude is a lot of what I've said here.
Oh, we haven't talked about vacation properties, because that was something you were looking at.
Yeah.
Can you talk to how you got that? How that journey started? What triggered you to start looking at vacation property?
Okay, so I spend a fair bit of time up in like the Wyerton Sauble Beach area in the summers, because that's where my mother-in-law has a cottage. She has actually several cottages, including vacation rentals. So She started buying houses and she would renovate them and then rent them out. And, not even waterfront, but like just across the road from water. And one of them, she's getting $1,000 a night in the summer, like on weekends. And then the weekdays, maybe like 700-800. And I was just crunching these numbers. And, I did some research talking to some of the investors in the community. And I figured out an area with buildable lots. And basically, I worked out some numbers. And if I bought these like 8 lots and, built 2,000 square foot houses on each one, I figured I could turn that into, across the 8 lots after a refi commercially, like $40,000 a month in cash flow. It would have been like an $11 million project. And I kind of needed to make a decision right away. It was towards the end of last year. And the reason I didn't is I just saw the lockdown policy and the way it was going. And I felt like I would have been really exposed if they were to do another halt to construction, which just happened for new permits have now been halted again. And I would be heavy in the private money, heavy in private, heavy in the something like that. I would have started an equity fund, and I would have basically been paying a coupon rate, on that equity fund, and so I'd be paying 9-10% or whatever it would be. And if I was just halted, it would just destroy the fundamentals of that deal. So if I'm going to do something like that, I need to know that at least it looks like I'm in the clear, or I have a hedge, or I have a fallback. And in that case,
or you bucket a little cash.
Yeah, I didn't have a great plan B if they were to do exactly what's happened now. So, which is why I didn't pull the trigger on it. There'd be a certain buffer, like 5-6 months. That's fine. That's not going to break things. But if it persists, is the challenge. So for me, that move would have been digging in the heels. And, I wasn't quite sure I wanted to go there. So I'm actually willing to even look outside of Ontario right now. It looks like I'll be headed down to Florida this weekend. So when I'm down there, I'll probably take a look at some real estate. And if I see stuff that makes sense, that might be the next place for me.
I love Florida.
Florida's nice. So warm. I wouldn't mind spending some time down there in the winters. That's something that I've had in my mind for a long time. It'd be really great. I love Canada in the summer, but I would certainly love to not be here in the winter.
Yeah. I get mad because I see people golfing on Instagram because they're all Americans.
Like,
I hate you.
Oh, by the way, I'd be bringing my golf clubs, Erwin.
You're bringing your golf clubs?
Yeah.
To fit on the helicopter?
No. So they would stay in the car. Yeah. No.
Okay.
Our car doesn't come on the helicopter. Yeah. So the hypothetical is we're importing our car on a truck and then we're flying a helicopter over the border. This is the plan. So we'll, if all goes as planned, that's what we'll be doing.
I don't understand that. How come you have to fly over the border?
It's not that it makes sense. It doesn't. But yeah, you can't. You can only go across the border if you're essential right now. By air, you can go in if you're non-essential. So for whatever reason, that makes no sense. So I can literally go to the Buffalo airport in a helicopter from St. Catharines, and that's okay. But not if I drive. And my car could be driven across by somebody else, but not me. This is the world we're in now.
May I ask how much a helicopter ride is?
It's not cheap. No, you won't like this. I think that's $1,200 for the helicopter, $700 for the car. It's not cheap.
For something you could just drive the car over for.
I know. Yeah, we could save $1,900 by just driving the car across. Oh man, I know.
After this is done, I'll show you how I made $1,900 today.
Yeah, so we'll cover it up. We'll cover it.
That's what stock options are for me. It's to cover all these things I don't want to pay for.
Yeah, right? It makes a lot of sense. Now we're talking about it earlier, and yeah, I can definitely see what you're doing. I mean, it's a lot to learn, but there's so many people doing it. It's ridiculous. So many people I interview on my podcast are doing this.
So we've been talking about fiat currency and stuff. Now you already know this stuff better than I do. Like the governments have bought up all the crappy debt already for the companies, and I think we can both agree, cash is trash. Right?
Yeah,
cash flow is king or queen, but cash. So no one wants to hold cash. At least smart money doesn't want to hold cash. So what if you're like Apple? They're sitting on like 81 billion in cash or something, right? If you're a smart CEO, what do?
Pay it out in a dividend. Or if you don't, or you invested in something, that's going to hold, like buy more buildings, buy more real estate.
Or even buy your own shares.
Buy your own shares back. True. Yeah.
What does that do to the market?
Drives up the price, I guess.
So that's why we do what we do.
Yeah.
Because you're smart. You get it, right? It's like, who wants to hold cash? The government has declared we're printing money.
Yeah. It's funny. They tell you, right? They tell you.
They told us.
And I keep cash in my business, right? I mean, I run a construction company. I have to. Yeah. And then, of course, I have my rentals, and to sleep at night, I keep like $15,000 per property, and that's inefficient. And you know what? In an inflationary period, like say we did hit like 20% or whatever, like it's going to be hard to like, you want to keep that money to pay your plumber, to pay your, HVAC guy or your miscellaneous tasks guy. It's going to be frustrating to watch that money, you need it, but watch it go down in value. And but it's just part of the business, right? So that's why it's nice if you have like a little physical gold and silver, you can actually exchange that. You can relatively quickly exchange that, and it'll hopefully hold. Again, no one knows in the short run, like gold could tank, but it's. You don't want to do all of anything, right? And we're not giving an investment advice here, if that's not clear.
We're not professional.
Neither Erwin nor I. We just two guys talking. But it's just part of the business, right? You manage these risks, and you manage it as all part of the business, but you don't want to sit on a big amount. Absolutely.
And so what are people going to do? They're going to buy hard assets man. Yeah,
that's where it's at. That's where I'm at.
And that was my point, is that we all knew this was coming. Obviously, again, the pandemic accelerated everything, but hopefully the pandemic has made people now aware this is what happens, right? All the asset prices go up. And I'm not like we were talking about crashes and stuff. I'm not saying it's not going to happen. Like the stock market is way crazy.
It could crash. Yeah, right? That's the thing. Like
it's based on what we're just discussing. Like CEOs, if you're sitting on a pile of cash, what should you do? What should you do?
Yeah.
Right. So they're probably buying it. A lot of them are buying their own shares back. And you're just recycling into a bigger bubble.
Yeah. Driving the market up even more.
Right.
Yeah. It's so artificial. And I think this is where we got to look at
artificial.
This is what we got to look at. Like, what's the scenario? Like, where do you see the breaking point? Like, why in a normal recession, stock market would have gone down.
Oh yeah.
But now it's at all-time highs. And why is that? Well, there's so much money being pumped into the market, right? And it's flooding back into these markets. When we're looking at that scenario, so when will we see it crash, right? Right now, this lockdown has not really affected the upper middle class.
People with hard assets.
Most of the people with hard assets weren't really affected. They didn't lose their jobs. People in the service industries lost their jobs a lot. Hopefully, their mortgages were small; they can cover. So we haven't really seen a large scale effect. But once people start getting hurt, like they lose their house or they've lost their job, now they tighten up and they don't spend. Well, that money belonged to those corporations. So now a lot of corporations lose their liquidity. When we find ourselves there, is that when we start to see the stock market come down? Will we see the real estate come down? I think we could see real estate come down in the short run. I don't think it stays there in the long run, but certainly I see an opportunity potentially coming where we could buy up cheaper real estate from a correction. It could happen. It may not, but it may just inflate away and keep going. None of us have that crystal ball, but I do think it's possible if enough people were hurt and lost their pensions, they contract, they stop spending, and then that seizes the economy. And that's when you start to see these changes. Maybe you start to see some people lose their pensions. So far, the US government and the Canadian government have done a pretty good job of hedging and helping people to not lose everything, which has been actually quite a nice part of this. But because people haven't been burned, it props it up further. And here we go. We continue on and we wonder when will it come, if it's going to come, that correction.
And like you were talking about earlier, like we ask questions. So the question that comes to my mind, because you were just talking about it, was about pensions. Well, interest rates are basically zero.
Yeah.
Pensions usually have a lot of fixed income assets. So how they generate income for the pensions?
Yeah.
When they're paying zero. I'll Google it. I don't expect you to have an answer.
I love these questions. The questions are where I like to live, Like let's just ask some questions, right? Get everybody thinking, because no one take my word for any of this stuff, right? Like ask your own questions. And I think if we all take that approach with things, let's not believe anything we hear. Let's question it and come up with our own thoughts and we can go from there. And I apologize to everyone listening to this. This is like the product of Erwin and I talking for 4 hours. So
and not having seen each other for a while.
So this is the very evolved part of the conversation that we finally end up on.
Is it?
Devolved, one or the other.
Devolved. The forces that have separated us. And now you're going to Florida. That's okay.
We'll see. Yeah. Hopefully all goes as planned there. If there are any hiccups, we might not be, but we'll see.
Hope you get to go, because a friend of mine went and it was a wonder for him for health.
Yeah. I want to just golf every morning if I can.
You asshole. Now I hate you.
I just got to figure a way to do that if I can. Buy like a month pass or just buy like a big bulk pass for one of the courses near where we're staying.
Would you play Trump's golf course?
I don't know where that is, but
Would you look it up and go have a look?
I don't know.
I just, folks. I'm just curious because I'm sure lots of people have given up their membership. So
Yeah.
whatever.
Oh yeah, maybe get a discount now.
Maybe get a discount. Value golfer.
Yeah. I just want
Groupon.
to get out there. Like I want to get better. Like you and I golfed a bunch this summer, and I just want to be a better golfer. So this would give me an opportunity.
I hate you. So Andrew, we're running out of time. I've taken way too much of your time today. Hope you don't mind.
Yeah, it's been fun.
So I always want to give the guests some space to talk about whatever they want. Is there anything else that you want the listener to know? Any pieces of advice or things that you've learned recently coming up now that we are in January 2021? We've gone through a year of the pandemic. Like, what have you learned? Anything you want to share with the listener?
Yeah, you know what? I think we've covered a lot of it today. I think that the big thing is just continue to be discerning, continue to ask questions. Those are the biggest things. Like this past year has really just driven me to ask more questions and realize I was on the right track for doing so.
Mm-hmm.
And I think that now we're going to see more millionaires made and more multimillionaires and billionaires in this time from those who are doing exactly what we were talking about and looking for the opportunity. And sometimes I've been caught up in my own head and in my own thoughts with this stuff. So you got to balance it.
Mm-hmm.
But yeah, definitely, don't fear of taking action. Just do your research, ask your questions. And then,
Mm-hmm.
If you're listening to this kind of stuff and you're educating yourself, you should be on the right track.
Yep. I've always looked for how to take information that I learned and how to turn it into opportunity.
Yeah, absolutely. Yeah, you do a great job of that, like I said. So, Erwin, I'll look forward to picking your brain more on growth, right? Because, one of the things you've done really well and I admire is just growing this. You and Cherry together have grown this into something really impressive.
Yeah. Like, people need to know this stuff. So thank you for putting up the message out there because there's still so many people we haven't gotten to.
Yeah.
Only 12 people listen to this podcast. I know 3,000 listens to yours every day. But there's still a lot more Canadians out there that need to know systemic problems. Cash is trash.
Yeah, the cash is trash thing. And I think so many people are now like catching on to this, right? Yeah, like listening to these kind of podcasts, like they're getting it. And yeah, we got to get the word out. You're right. Yeah. But the work has started and the movement started and people are starting to pick up on it.
Awesome. Maybe you'll own a Bitcoin next time we talk.
Yeah, one Bitcoin, maybe worth 80,000. We'll see.
Awesome.
Yeah.
Thanks again, Andrew, for doing this.
Thanks, everyone.
Before you go, if you're interested in learning more about an alternative means of cash flowing like hundreds of other real estate investors have already, then sign up for my newsletter and you'll learn of the next free demonstration webinar I'll be delivering on the subject of stock hacking. It's a much improved demonstration over the one that I gave to my cousin Chubby at Thanksgiving dinner in 2019. He now averages 1% cash flow per week, and he's a musician by trade. As a real estate investor myself, I got into real estate for the cash flow, but with the rising costs to operate a rental business, it's just not the same as it was 5 to 10 years ago when I started. Never forget that cash flow reduces your risk. The more you have, the more lumps you can absorb. And if you have none or limited cash flow, you're going to be paying out of your pocket, like I did on a recent basement flood at my student rental in St. Catharines, Ontario. If you're interested in learning more, register for free for my newsletter at www.truthaboutrealestateinvesting.ca. Enter your name and email address on the right side. We'll include in the newsletter when we announce our next free stock hacker demonstration. Find out for yourself what so many real estate investors are doing to diversify and increase their cash flow. And if you can't tell, I love teaching and sharing this stuff.